Welcome to TradeTheMBI.com. This is John's report. Is for no longer November, December the 3rd. And we ended just a little bit below where we started the month. It was right over here that we began the month, and just slightly down. A little retrace in between there just gave us opportunities, scared a lot of people, had a bunch of shorts jump into it, and all we did was get back to exactly where we were. So halibut hasn't done its magic yet, but that's fine. Nowhere near overbought with the setup. I mean, we're at -30, so that's perfect from an extreme histogram standpoint. The shakeout, you're no longer at your deep negatives, you're right at the even point, so not nearly as negative as some people may want to make it out to be. And you know what, let's go look at a weekly real quick, because again, we were going off of our orange dots that were showing up, and that still has an upside for that one at 1454, and I think the others were higher. If I take a look at them again, it's always good to remember 1450 and then 1474 for all of those setups. Now, dip below the red line, is it possible we come back and retrace before coming? Sure, but looks like we're still in decent momentum, particularly since we're going into year end. Looks more positive than negative from that standpoint. You can see from the trend plot using Fibonacci setups, definitely been green since, you know, this one massive return bar. Some people are going to call this resistance. Fine, okay. Been above it, been below it. You know, you can play around with where it belongs. Does it belong on this one? Should we come down to right in here, in which case we're above resistance? Is it just the high peaks at that particular point that doesn't really match what's going on over here? So it's close. You know, you've had a lot of points where you've gone past it, come back, and finished under it before popping again. So, you know, Monday will be an interesting test of that, and obviously our bias is to the upside. Nowhere near the top side of the Bollinger Band. Good spacing on it. It's not like back over in here when we were squeezing, expecting a large expansion. Now, when we look at this ratio, it starts to get a little more troubling, because it's very simple to do. Instead of 1.22, you just say 122, and then you divide it by the 181, and you're going to get 0.67. Well, at 0.70 or better, we're looking for a short move, meaning a decline, because that would indicate that shorts have overwhelmed the buyers, and you're looking for some type of a retracement move. So worth noting, we'll keep an eye on it and see if that relationship holds up. If they're able to squeeze up a nice move for gap, that should force the short covering. But when we look at a power momentum a little bit later, we'll see that it's problematic because of the setup that's happening. And you can see that we've had a huge decline in the price oscillator from peaking out up here, as well as momentum flat. Now, we had this was a good setup actually coming down. We should have seen a nice bounce off that. The fact that we didn't get the bounce like right here, you know, we'll have to wait and see. But nothing changed from the computer standpoint. Still these 1435, 1396. So fairly decent range. And speaking of ranges, just if we go ahead and look at the buy-sell ranges, 1405, 1422. So looks for any retrace down around that mid 1405, 1407. You know, it was a very attractive area that we wanted to be in as well. From our standpoint, we did fine with our puts. Nothing special as far as that goes. Went ahead and sold the 58s for this coming week, so no shock with that. And we had talked about the dip below this red line. It retraced that just like we thought it would. It had done it in after hours, but always nice when the market does it in full regular trading. And you know, -14 got close to overbought there at the end of the day. Not quite. USO, okay, we can go ahead and take a look at our portfolio for that, because it's doing very nicely. So we had 600 shares. It turns around and sells 300 of them because they got called away at the 32, but we also collected the full 75 cents for that. So fairly decent, because we get the sale of the 300 at 32, and then you get the 78 cents. So overall, that just brings our cost basis on the remaining 300 shares that we have down to $26.94. So nice, and that's all it takes in one of our setups to have things turn around. I know CLF, WLT, we were using USO and X as a hedge against those two, and it's working fine. Speaking of which, I've actually updated the portfolio summary now. It was tough when the site was down and stuff to get detailed on some of these things, but went back through and took it, and we can see that we're up to 1,200 shares with the CLF there, and that's our minus factor. But then we have our X. WLT made a nice move today. Didn't hold on to all of it, but it was still a decent move. And there's the USO, and so it gives us our closed positions. And we're only at 43%. I'm still looking for us to hopefully finish the year over 50. I'd love to be right around the 60 to 63% range, but I can't, make it happen. We're going to need to see a little bit of a rally in order for that to take place. Have a decent setup. It's been, I think, an overall tough year. I mean, last year was a lot easier. We were well over the 100% number. GLD obviously puts in another bifractal. Obviously, again, red trend, great opportunity. You have the dip below the red line, so you expect that low to get a retrace, and you also want to be buying a discount in red trend even when you get a signal. And for that, you typically would take a third of the move, but in this particular case, once you get the gap down and starts moving, you just put your buy stop in right at this level up here, and I can just put that in, and then you just continue to trail it down each day. You can move a little bit. It helps if you have like a 78-minute chart and stuff, because you can then parse it. Like when we look at CLF here, we can see that we got overbought up in these particular points, came back down, NBI, and actually that looks attractive right there at the 28.75 for an additional move up. But we went ahead and sold the 30s because we got put the 30s. So if we go ahead and take a look at what that looks like for us. So we wanted to sell the calls on the shares that we got put. We're not selling any additional puts, but the hope is that we get called away on 600 of the 1,200 shares, and if that happens, we get to keep the premium, and we've already made 50 cents off of it, so our cost base is really $29.50 on those shares, and that would just bring us back down to another 600 and get fairly close to where we can then utilize a better transition for either selling calls or puts in relation to it. So all in all, nothing special there. I don't know why that is there. That's interesting. And should refresh. Let's go to a weekly of CLF. Oh, for some reason it's not giving the full data. Oh well. Nothing particularly special. I mean, CLF isn't doing anything that we want it to do right now, but the numbers are improving, so from that standpoint, can't complain there. X, from its daily standpoint, doing fine. Started up, just going across, not overbought anymore, so no objections, and that was a perfect setup. In fact, I don't even have anything for that because we're not going to do anything again. We're utilizing the fact that it's moving in the right direction as a hedge against CLF as well as the USO. WLT right here, we have the GAM popped up nicely from give orange fractal the other day, and then we get a huge move up, and it held on to about 2/3 of it. Not quite over about -16 on that differential, so not bad, but -6, so potential is we could get a green trend just as it gets overbought and then wants to roll over a little bit. But then if that takes place, we should be close to our 32 cost basis level and be able to take advantage of it. So from CLF standpoint, WLT 32.15, we went ahead and turned around and sold again the 6 of the 27.50 puts. Only got 38 cents, but it's fine. We just keep whittling away one step at a time, and it won't take but another day, and you could turn around and go from being -6% to +15 on a 2-day move for one of these. So not too difficult. eBay was another one that we've added to the I'll put it up here, the dot alerts. So eBay and Facebook both available, as well as the others from Apple, Amazon, Google. I would have thought more people would have taken advantage of these because they were so good for the whole week. It was crazy. Even if we look at what happened today, I mean, Apple was down, but every time it gave orange dot signal, met the targets, orange dot went up. So that was good. Even better was Google. I mean, Google was on fire. Give a green dot I mean, yesterday was even better because it had far bigger range. But put in the red dot, met that short criteria. Put in the orange dot, moved up. Orange dot again towards the end of the day and shot up and met that target as well. So to me, it's shocking because I made it cheap for everybody to get into them without any excuses. And it points out that I can take you there, get you to it, but I can't make you trade it. Just got to keep encouraging to go the right direction. Now, if we look at the ES here, we've got our halibut signal as well, just a little bit later than the INX showed it up, but we can look at that projection to 1437. So from our futures standpoint, I don't think I have a futures chart up. Well, let's just go back to one of these, return to the portfolio, we'll click futures. Just that easy. Try to make it simple that way. So we came down, we were looking for somewhere around 1407. It got down to like 1408, but then knew in the morning when we kept bouncing around there that it was going to have to take the higher level. Got filled in there at 1411. Now, if we do get any little bit of a retrace, I'm going to definitely have us jump in additional contracts. So if you missed out on jumping into that, looking for that 1420, but if we get any breakdown, I'm going to have us adding into it because it looks attractive coming off that halibut setup. So definitely want to do that. But one I wanted to point out was let's see if I can do this really quick. Increase the power mode right here. You can see that is a net reduction of sellers, and whenever we see that coming back in these places, I've had a pretty decent turnaround. So I'm going to need to see Monday an inverse of this relationship, getting the cyan back over the yellow. Otherwise, that could be problematic and really reflect in that up and down power short setup. So we'll have to keep an eye on that one, and just continue to do what we're doing. It's working out fine. As always, though, if you have any questions or suggestions for stocks you're interested in, and I'm going to work on putting together for members our portfolio stocks so that I can get at least 78-minute signals to you on those, and we'll go from there. But we're going to end the year end with positive moves, so let's get excited and take advantage of every opportunity that comes our way. As always, trade well.